They told you crypto was dead. They said utility doesn't matter. They were wrong. While the price action has been flatter than Kansas, the world's biggest companies, the institutions, were quietly building the rails. You've been ignored for 10 months. You've been bleeding for 10 months. Now Hedera just detonated an announcement that doesn't just change its future, it changes yours. The institutional floodgates are about to open, and if you're not prepared, you'll be on the wrong side of the single biggest wealth transfer of the decade. If you're interested in this topic, hit the like button, subscribe, and type interested in the comments and I will give you a heart. Let's dive in. Look, I'm not going to sit here and give you sunshine and rainbows. Right now, this chart looks like a flat line on an EKG. We're in that brutal, gut-wrenching phase of the market, the one I call the great indifference. You know it well, you check your portfolio, you sigh, and you close the app because nothing has moved. For 10 agonizing months, the price of HBAR has been trapped in a trading range, a purgatory for patience. This is the ultimate poker game. The institutions, the sharks, are trying to get you to fold your hand by making the price so boring, so utterly stagnant that you think, surely there's nothing happening here. They use the price as a weapon of psychological warfare. The negativity in the space is palpable. They'll tell you that the 2024 high back in January was the best it's going to get. They whisper that losing this crucial, long-standing trend line is inevitable, and once we dip below those prior March 2024 lows, those double bottom touch points from April and June, it's a one-way ticket down to that soul-crushing 9-cent retest. They want you to panic sell right before the rocket ignites. But here's the thing about this kind of negativity. It's the smokescreen that covers the greatest American stories. Think about it. The legendary pioneers didn't get famous during the gold rush. They got rich during the quiet, arduous journey to the gold rush. They were the ones laying the track, building the bridges, and digging the mines while the naysayers stayed home talking about the weather. What you see in the price is a reflection of what the retail market, the emotional, short-sighted public is doing. What we need to focus on is the weekly candle close, that line in the sand that separates a minor correction from a major market structure breakdown. If we lose it, it's a dip, sure, but for those of us with a long-term vision, those of us building our futures brick by painful brick, it's a massive opportunity. It's like getting a second chance to buy Microsoft in 1995. Now this waiting game is exactly where most people lose their money and their sanity. Why? Because they're trading alone, lost in the noise of Twitter and the despair of their own charts. You don't have a battle plan and you don't have a squad. This is the new problem. You are sacrificing your financial future to loneliness. You are giving up life improvements like financial independence, escaping the 9-to-5 grind, and creating generational wealth, all because you lack community support during the toughest times. Here's the solution. You need to join our community. We've built a war room, a digital bunker where we track these macro shifts and maintain stoic discipline while the market tries to break us. We dive deeper than any YouTube video can, providing real-time analysis, risk management strategies, and the emotional support you need to hold the line. The truth is, you can't tackle this market alone. Just like the early American settlers couldn't tame the frontier alone. They needed a wagon train, a community, and a shared vision. Don't let the price action trick you into forfeiting your future. Right now, while the price looks dead, the fundamentals are having an October revolution. This is why you need to stick around, because the next 2 sections will expose the actual multi-billion-dollar moves that are happening behind the scenes. If you're ready to stop being a lone wolf and start building real wealth, hit the link below and join our Discord. Your financial freedom depends on it. Now, let's talk about the first shockwave that just hit the market. We talked about the lie of the price. Now let's talk about the truth of the market expansion. The first major sign that Hedera is done playing small is its relentless march into new global markets. Because for a network built on utility, users are the ultimate metric. Forget the usual tier 1 exchange listings. Hedera already checked those boxes years ago. The real strategic move, the one that tells you exactly who they're targeting next, is the new listing on CoinSpace. Why does a listing on a crypto wallet in the Philippines matter? Because this isn't just any wallet, it's the #1 fiat and crypto wallet in a nation of over 110 million people. This is the retail gateway to a fiercely active, mobile-first market in Southeast Asia. Think of it like the Louisiana Purchase in American history. It wasn't about the immediate cash flow, it was about strategic land acquisition for future expansion. By securing a dominant presence here, Hedera isn't just adding another trading pair, HBAR with PHP and USDT, it's planting a flag in a key region, ensuring that when the next wave of retail adoption hits, the one that will dwarf the 2021 cycle, HBAR is the easiest, most accessible asset to buy. We love to see this because it speaks to a massive dual-pronged strategy. On one side and hyper-focused retail market exposure on the other. With over 162 trading pairs globally, this isn't expansion, it's ubiquity by design. Now let's talk about the elephant in the crypto room. The decentralized finance market has been the heart and soul of this revolution. The promise that you can be your own bank and escape the central control of middlemen. It's the digital equivalent of the American dream, individual financial sovereignty. For a while, DeFi across the entire crypto space has been flat, or as I like to call it, taking a mandated nap. Platforms like Ethereum, which is still massive with nearly $76 billion 0 cents locked up, have seen their total value locked dip from recent highs. But while the market is sleeping, Hedera's ecosystem is getting its iron lungs installed. Take Bonzo Finance. They launched quietly in 2024 and have been building their Bonzo vaults with the kind of meticulous, boring consistency that makes institutional investors drool. Even though their TVL has consolidated from a peak of $58 million 0 cents down to a still respectable $26 million 0 cents, they are surviving and evolving. This is a critical point. While meme coins collapse and hype projects vanish, the foundational DeFi protocols on Hedera are being built to the highest possible standard for one reason: institutional DeFi. The Hedera team is explicitly focused on ensuring the network is ready for institutional-grade protocols to launch by Q1 2026. What does that mean? It means they are building a highway, a digital interstate system that is stable, fast, and compliant enough for major banks and financial firms to move their multi-billion-dollar assets. The current retail-driven DeFi is just the proof of concept. The real game is getting the old world of finance to park their wealth on-chain. And this leads us directly to the bedrock of that institutional play: tokenization. Real-world asset, RWA tokenization, is the single most important narrative for the next decade. If DeFi is the bank, RWA tokenization is the Federal Reserve Vault. RWAX.ly currently tracks over 32 tokenized assets on Hedera, ranging from US Treasuries via Arch and stablecoins like USDC, StraitsX, and the Australian digital dollar, to a huge amount of tokenized real estate via Red Swan. Hedera has been tokenizing assets for over 3 years, long before it became the crypto buzzword of 2025. It's an engine of quiet, sustained activity that the market is only now starting to notice. While the total value tracked is still catching up, the mere volume and diversity of assets, institutional funds, private credit, non-US government debt, demonstrates Hedera's utility far transcends retail trading. This tokenization focus, combined with the strategic market gateways like CoinSpa, sets the stage for the true game-changing institutional infrastructure. Get ready, because in part 3, we reveal the final, most crucial piece of the puzzle and how it connects to the largest cloud provider in the world. Don't wait for the price to move to start learning. If you want the in-depth, real-time market insights on these tokenized assets and the DeFi play, you need to be in our community. Click the link and join the best crypto mindshare group today. Now, for the biggest news of all. If the last 10 months felt like a slow, cold grind, October was the moment the Hedera engine room went to full throttle. It wasn't about a single partnership. It was a coordinated assault on the institutional world. Hedera put out a post detailing their groundbreaking October, and it reads like a checklist for institutional adoption. In the Canary Fund's HBAR ETF. This wasn't just a listing, it was a monumental achievement. HBAR became only the third cryptocurrency after the giants Bitcoin and Ethereum to secure an institutional ETF listing on the US stock market. This move shatters the old narrative. HBAR is now a certified, securitized asset for traditional finance. This is a 5-alarm fire signal to every Wall Street fund manager who needs a compliant, easy way to gain exposure. The retail reward. To ensure the retail base didn't feel left out of the institutional party, the Hedera Foundation committed an additional 250 million HBAR to the native staking account. This is the win-win scenario. Institutional validation meets retail reward. Verifiable AI at NVIDIA GTC. This is where the real enterprise utility shines. Ecolab and Accenture unveiled a verifiable AI architecture using Hedera. Think of the problem. AI agents need to be accountable. Their decisions need an immutable audit trail. Hedera provides exactly that, delivering encrypted attestations for governments and enterprises. They are solving the future problem of AI governance today. The numbers from the DAP Radar report confirm this foundational growth even while the price was stagnant. DApp activity is up 190% year over year. On-chain transactions surged 386%. Smart contract volumes climbed 88% quarter over quarter to an astounding $3,700,000,000. This isn't noise. This is the sound of utility winning. Now, hold on to your hats, because this is the single most important, most boring sounding, yet most powerful announcement that defines the future of institutional DeFi. Hedera's integration into Google Cloud BigQuery public datasets. I know, it sounds like technical jargon, but this is the key to the castle. BigQuery is Google's massive data warehousing tool. By adding Hedera's full transaction history to this public dataset, they have just done 3 things. One, head of the playing field, they've placed Hedera's data right next to Bitcoin, Ethereum, Polygon, and all the other major chains. 2, institutional transparency. Wall Street, banks, analysts, and major corporations don't use small custom dashboards. They use BigQuery. Now, they can use simple SQL commands to compare transaction costs and speeds between Hedera and literally every other major blockchain. They can track tokenized assets at scale. They can conduct historical research on growth and performance. This is the core infrastructure for institutional trust. 3, the 2026 mandate. This is what seals the deal. The Hedera team is explicitly focused on leveraging this infrastructure for institutional-grade DeFi protocols launching in Q1 of 2026. This isn't just an announcement, it's a declaration of war on inefficiency. It tells us that Hedera is finalizing the groundwork to onboard the world's largest organizations. This is the utility cycle the narrator spoke of, a cycle that moves beyond the volatile bull/bear structure and focuses purely on real-world value transfer. The narrator is absolutely right. Everything that happened in the market, the volatility, the long winter, was just the prequel. The real story, the institutional wave of 2026, is about to hit. They want you to look at the chart and see a downtrend. We want you to zoom out and see the pattern. Boring building followed by exponential growth. Just like the early investors who weathered the dot-com bubble to see the internet become the backbone of the global economy, we are at that pivotal moment. The price action is a distraction from the fundamental value creation happening right now. The decision you make today to either succumb to the negative bias or to hodl, hold on for dear life, and accumulate based on the undisputed institutional-grade utility being built will define your financial position for the next decade. Don't be the person who gets to 2028 and realizes you sold the digital equivalent of Amazon at its infancy. Don't just watch the next cycle, own it, hit that subscribe button to stay ahead of the curve, and seriously, join our private community now. We're building wealth, not just watching charts. This has been your deep dive. Peace out.